On this Monday, 28th of July, 2025, investors in Singapore are eyeing 5 standout stocks that could be top picks in today's market. These are not just random names, they're backed by strong financials, government policy shifts, and future growth potential. Leading the pack is DBS Group. As Singapore's biggest bank, DBS has continued to show impressive earnings growth, especially through its digital transformation. With dividend yields around 5% and a boost from the government's equity market revival plan, DBS remains a stronghold for long-term investors. Next is OCBC Bank. Known for its high dividend yield of around 5.25%, OCBC is a go-to for those seeking passive income. With a diversified business in consumer and institutional banking, it's well-positioned to benefit if the Monetary Authority of Singapore, or MS, eases monetary policy. That policy decision is just around the corner, making OCBC one to watch closely this week. Coming in at number 3 is UOB, another core pillar of Singapore's banking sector. Analysts have set their sights on a price target of around $19.30, with UOB showing consistent resilience in earnings across the region. All 3 banks, DBS, OCBC, and UOB, are also set to benefit from the MAS's recently announced $5 billion equity market development program, which aims to boost liquidity in local markets. But it's not just about banking. Sea Ltd, the parent company of Shopee and a major player in digital payments, continues to ride the wave of Southeast Asia's e-commerce boom. Although it's listed on NASDAQ, Sea is widely held by Singapore investors. The stock has already surged 47% in 2025, after a massive 62% gain in 2024. Its upcoming earnings report is expected to show a 20% year-on-year revenue increase and a huge boost in profitability. If you're looking for growth, this is the one to keep an eye on. Rounding out the top 5 is Mapletree Industrial Trust, or you might also consider Venture Corporation. These are strong picks for those looking for reliable dividends and lower volatility. Mapletree in particular has a reputation for consistent payouts, backed by stable real estate income. In an uncertain market, these names offer a buffer against volatility and help to balance a growth-heavy portfolio. Looking ahead, there are several trends that could affect these stocks. Inflation in Singapore came in lower than expected, giving MAS room to ease monetary policy. This could be good news for the stock market as a whole. On top of that, the government's move to inject over $1.1 billion through local asset managers is set to bring more liquidity and investor confidence to the market. But caution is advised. GIC has already warned of potential overvaluation in some sectors, urging investors to stay disciplined. Also, keep an eye on global trade tensions. Singapore's Q2 GDP showed strong growth partly due to front-loading ahead of U.S. tariffs, which may not last. For investors, it's important to monitor a few key indicators in the coming weeks. These include Singapore's core and headline inflation numbers, GDP revisions, and any moves in MAS's currency policy. Bank earnings and dividends will also be crucial, especially for DBS, OCBC, and UOB. And if you're watching Sea Ltd, pay attention to digital payment adoption and e-commerce growth across Southeast Asia. In summary, the best opportunities right now lie in a mix of high-yielding bank stocks, growth-focused tech like Sea Ltd, and stable dividend plays such as Mapletree or Venture. Each comes with its own strengths and potential risks, but together they offer a well-rounded approach for navigating Singapore's market in the second half of 2025. If you find this interesting, don't forget to like, share, and subscribe to our channel, 2230.